Let's talk about your options for ending mortgage forbearance. First thing we want to mention here is that you do want to communicate with your mortgage servicer. Your servicer does not want to foreclose because it's an expensive process for them, and they will likely want to work with you. And it's best to be proactive with your communication with your servicer, as ignoring the situation will likely only make it worse. Now, here are some of your options. First off, you have reinstatement. If you can afford to repay the past due amount, simply contact your servicer, pay the past due amount, your forbearance will end, and you go back to your regular payments. If you can't afford to repay the entire past due amount, then you might be able to add a few extra dollars to your regular mortgage payment in a repayment plan. How this works is that your mortgage servicer might agree to add a few $100s to your regular mortgage payment for, say, a period of 12 months, maybe more, and then once you're done paying that additional amount, you'll be back to your regular mortgage payment, and the forbearance will be ended with the past due amount paid. So you may be able to negotiate a repayment plan with your mortgage servicer. Another option might be a payment deferral. If you can't afford to pay any extra right now, your servicer might be willing to push back the past due amount to the end of your mortgage term and make it due after your last scheduled payment. Basically, if your last payment is due, say, sometime in March of 2040, they might say, okay, your last payment will now be March of 2041, and you'll pay some additional mortgage payments to make up for the past due amount. This is called a payment deferral, and your servicer might be willing to do this depending on your situation. Another option might be a loan modification. If you can't afford to pay the past due balance right now, they might agree to extend the mortgage term, reduce your interest rate, or even forgive some of the actual amount due. They also might do some combination. Basically, they'll go back to the drawing board, renegotiate your mortgage in a loan modification. Again, this is going to vary from servicer to servicer, and it's going to depend on the type of mortgage loan you have in the first place. Another option that's out there right now, if you have an FHA loan, might be a COVID-19 standalone partial claim. What this is that the past due amount is actually turned into an interest-free second mortgage. This stops the pain to some extent and creates a second mortgage where you're making payments that are interest-free on the amount due. This is kind of similar to a repayment plan, and again, it's going to depend on the type of loan you have, if you have an FH loan, and if your servicer is willing to go down this route with you depending on your situation. And then the final option, this is kind of the last option, of course, might be to just list your house and sell it. This is a last resort option, but if the options above that were just mentioned won't work for you, it might make sense to get your property on the market and sold now in order to pay off the initial principal mortgage balance and anything that's past due. And depending on market conditions, if they remain hot and heated, you might find that you can flip a stressful situation into a positive one and even put some money in your pocket depending on how much equity you have in your house. If you'd like to discuss any of the options above, if you'd like to discuss how much you might be able to get if you were to put your property on the market, feel free to use the contact info you'll find near this video to get in touch. We're very happy to help and look forward to talking with you.